Hey guys, this is Tex, and it is Tuesday, November 12, 2019. Thanks for joining me today. This video is going to be just a little bit different. We are going to go over a trade that I took yesterday. I ended up having one of my worst losing days in quite a long time yesterday. Not my worst losing day ever, but my worst losing day in quite a long time. And it was simply because of one mistake that I made. Just an honest mistake that can happen, but I made another mistake by kind of exaggerating that loss. And so before I go over the trade, what I did wrong and how you should actually respond in such a situation, I want to give you a little bit of context into my mindset. So I'm coming off my best month ever trading. Last month in October, I was able to get about a 10% return on my entire account, which, may not sound like a lot, but that's actually a really good return for just 1 month of trading. When you think about like long-term investors who are happy with an average of, like an 8% return on an annual basis, if you can consistently get an 8 to 10% return on your entire account month after month after month, then that is really, really fantastic. And that is really the type of consistency that I'm interested in focusing on going forward. So since I started trading, the allure of getting really big wins and, focusing on making $1,000, in a day, that has long gone. Sure, I've had days where I've made over $1,000. I've also had days where I've lost over $1,000. And so when I, just decided to really sit down and look at my analytics and focus on what actually works, I realized that the single biggest change I could make was to size down. So like a lot of people who learn how to trade, you start, kind of figuring things out, you maybe start doing better. You inherently want to start sizing up your position. So theoretically, you make more money. And while this is true to a certain extent, what I found is that I had reached a point where my position size was clearly too big for my risk tolerance, and everyone is different. So of course there's no, generic answer of what kind of position size you should start out with and work up to. Everyone is different, and what your risk tolerance is going to be everything. And so for me, when I was studying my analytics, I realized that as I sized up, I started to basically take my trades off much earlier than I should have based on the risk reward profile that I had planned on the trades. And so I focused on sizing down and really letting my winners run to reach that full risk reward profile that I had planned on my trades. And of course, you want to pay yourself on a trade. When you take a trade and it starts to work, there's nothing wrong with kind of paying yourself. But you need to make sure that you're leaving some of your position on to realize that full risk reward profile that you had planned on your trades. And so I wasn't doing that because I was taking too much size, and I clearly was not comfortable with the amount of risk that I was taking on the trades, which made me take the trades off too early. And at the end of the month, prior to the last month, I would basically not really be going anywhere because I wasn't letting winners run like I should. So last month, by focusing on that, I was able to, like I said, have a really great month with only 4 red days. And my mindset coming into yesterday was that I was going to continue doing that. That's what I want to do, and it's clearly working. So let's just continue doing what we're doing. We're going to keep our position size the same, focus on the best setups that have the highest probability of success based on my statistics. And it was really starting out to be a great day. Now here's how the day turned into a really bad day. So I was looking at Apple. I wanted to short Apple. It basically had, you can see a gap down, right? It opened with this gap down. So Apple opened down here. Here's the open of Apple. And I was looking at Apple to basically rip and fill most of this gap up. And then I wanted to short basically the what you can call like a gap fade, but this is a gap fade up. I wanted to short that, and that's one of the setups that I have a lot of success with. And I liked this level right here. If we draw a line across here, you can see that we have a pivot high here, and we have a pivot low right there. Okay, so we have a clear level of resistance and support, and this nice gap down. Right, so as Apple rips with speed and distance, right, it's ripped up with speed and distance. It's a long way away from the VWAP, way down here. This is exactly the type of setups that I love to short or go long when you come up into a level with that speed and distance, especially when it's a gap fade trade just like this one. Now, I use Lightspeed Trading for my day trading broker, and you'll notice over here on the right side, I have 3 equity level 2 windows open. So these are the top 3 stocks that I'm watching on the day. And then the bottom one is an options level 2. And so you execute your options trades through the options level 2 window here. And you'll notice when I click on one of the other stocks, so here I clicked on the Tesla equity level 2, it loads the options level 2 for Tesla. And one of the things that I do in pre-market is from my top 3 stocks that I'm watching, if I'm thinking about trading options, I will look at where I'm thinking about taking the trade, and I will load the appropriate strike price. So on Apple, I was looking at shorting it up here, like I said, at this level, if it ripped up there with speed and distance, just as it did. So I look ahead of time, what's the best strike price to pick? In this case, that's going to be around the 259.50 level. We can see that the closest prices are 257.50, 260, and 262.50. Well, 260 was really the best. That was the best strike price. It was, you don't want to be too far out of the money or too far in the money, basically. So I chose the 260 strike price and I loaded it in advance. And I did the same thing with the other stocks that I was watching. Tesla was another one. I was looking at the 340 calls on Tesla. So I had the 340 calls loaded up on Tesla. Okay, and so I do that in pre-market before the market even opens. Now, market opens, Apple rips right up into my level. I'm sitting here staring at the chart, and I have my mouse sitting right here on the button to buy 5 of the 260 puts on Apple. So as it rips right into that level, I hit the buy 5 button, and it was absolutely perfect timing. You can see Apple pulled off that level beautifully. I was planning to take profit right here into the VWAP and basically take half my position off right there, and then see if you could get another move down into low of day. Possibly a double bottom, a higher low, but at least some type of an additional move lower. And that was the trade plan. You can see how beautifully it would have worked out. And I had that planned out from the open. That was the plan. And when I clicked the buy 5 button, I still wasn't looking over here. And Apple starts to pull back, and I told myself, absolutely beautiful, perfect. And then I looked over here, and what I realized is that I had accidentally had the Tesla equity level 2 window active. So when I click the Tesla level 2 window on the equity side, you'll see that the Tesla options level 2 window is open here. And so I didn't realize at the time, and when I clicked buy 5, I ended up buying 5 of the 340 calls on Tesla. So when I bought those, it was intended to be Apple when Apple was right here. This was about 9:39 in the morning. So when we go look at Tesla had this gap up yesterday. I think it was on an upgrade. It had a run up in the morning, pulled back into the VWAP, ran back up, and put in a new high of day here. And it was right here on this candle, literally right here at the freaking top, when Tesla was up at almost $347 a share, that I bought 5 of the 340 calls on Tesla. I think there were like $11 and change per contract. So that's a pretty big position size for me. It's way bigger than the position size that I had been trading over the period of last month. And especially to buy them all at once like that. And so when I bought those, of course, Tesla in the market, everything pulled back from there. And I think that I'm in Apple puts. And so here comes Tesla coming down like this. And by the time I look over and realize my mistake, Tesla's like all the way down here, almost coming back into the VWAP. So I look over and I see, holy shit, I bought calls on Tesla and I'm down like $400 right now. So the mistake was just an honest mistake, just a fat finger mistake. These things will happen. And really the best thing that you can do in this situation, and usually I'm very good about doing this, the few times that I have, had a fat finger mistake, I'm usually very good about just taking the position off immediately. It is not a trade that I was even looking at. It is not a trade that I even planned. And I definitely would not be buying the top. I would never go long up here, right? That was just an honest mistake. The big mistake that I made is that this time I did not take it off immediately because of the fact that I've had such a great month in October. So my mindset was basically letting greed creep into my decision making. And I was telling myself at the time that, well, let's give it a second here. Tesla was upgraded on the day. I'm making excuses right in my head. Tesla was upgraded on the day. It's clearly strong. It's coming back into the VWAP. I'm already down $400. Let's see if it holds the VWAP and then makes another run up. And then, maybe we can get out, break even, or maybe even turn it into a winning trade. Huge mistake right there. That right there ended up turning what would have been just about a $400 loss if I took it off immediately into a $1,000 loss. Because, of course, what happened, Tesla came into the VWAP. Now, it did pop up right here, and I was actually down about 250 on this little pop-up here. So I had an opportunity to take it off for an even smaller loss than like 400 that I saw when I initially noticed that, but I didn't. That greed didn't let me take it off, and then what happens? Tesla dumps below the VWAP, and then I take it off, and I lose $1,000. And to add insult to injury, of course, Tesla does come back up, puts in a new high of day. But that is, of course, hindsight. We cannot see that. We cannot expect that. It could have just as easily come all the way down here and filled this gap. And, you hold and hope, and you can easily let a trade like that turn into an even worse situation. So if I could go back, of course, I would take it off immediately for that $400 loss any day of the week instead of $1,000 loss. So basically, the hard lesson there is that the market had to basically slap a little sense into me, and sometimes these things have to happen. We have to kind of hurt ourselves or sabotage ourselves to really ingrain some pain into us so that we don't make those same mistakes again. And the one time that I didn't take a trade off that was an accidental trade is the time that it really bites me in the ass. And so that was a lesson that needed to be learned. And so I wanted to make a video today to kind of discuss that with you guys. So if you ever find yourself in a situation like that where you accidentally go long or short some stock because you had the wrong window or open, you click the wrong button, whatever the case may be, the damage is already done. Just take the trade off immediately. In the past, I've actually done a fat finger where I accidentally bought 5 contracts on Amazon, and they were something like $23 a contract. That's a freaking huge position. I could have easily lost thousands of dollars in that position. And when I realized my mistake, I immediately took it off, and I got extremely lucky. I actually made $150 on that day. Of course, that was nothing to be proud of, but I got extremely lucky because I could have easily, just from the spreads alone, I could have easily lost a lot of money on that position. And so while this trade on Tesla wasn't quite as bad as that could have been, it was definitely a much needed wake up call, I would say. And so basically ended up giving back a couple days, 2 or 3 days of profit that I have to slowly grind back. And so coming into today, I just focused on getting a nice green day in. I sized down even more than I normally would. Got a really great trade on Tesla. I made back about a third of the loss, but I did not come into the day focused on really making the loss back, just getting a nice green day in, completely hitting the reset button, not dwelling on the mistake, but learning from the mistake, and just continue grinding ahead. So I'm going to wrap it up there, guys. Hopefully you found the video helpful. If you ever find yourself in that situation, like I said, just take the damn trade off. Don't hold and hope. That is no way to trade. These things will happen from time to time. It is kind of an unfortunate drawback with the Lightspeed platform. I'm very happy with the platform, but I do wish that we could have multiple options level 2 windows open, since that is where we execute our options trades. They let you have multiple equity level 2 windows open, but they only let you have one options level 2 window open. So that is kind of a bummer side of Lightspeed. So going forward, I just need to double check and make sure that I have the appropriate stock active and the appropriate options level 2 active before I click the damn buy button. So I'm going to wrap it up there, guys. Thanks a lot for watching. Hope you're doing really well. If you have any questions or comments, feel free to leave it in the comments below. Hit that like button, subscribe for more videos in the future. As always, I do appreciate that. And we will catch you in the next video. See ya.